Hello guys, good evening. So let's get started. All right. So today we'll be talking about chart patterns. Today we'll be talking about chart patterns. So let's just get started as quick as possible. Let's see what we can cover up for today. So today we're talking about chart patterns. Chart pattern. So the first class we talked about candlestick formation, and then second class we talked about candlestick patterns. Same with the third class and the fourth class. So now is the fifth class, and today we'll be talking about chart patterns in this class. So we're talking about chart patterns. Um, okay, so we'll bring this here. So we have different types of, will I say types, or we have different kinds of chart patterns, right? We have different kinds of chart patterns. So it's just depending on maybe the one you see in the market or the one you know, and then you apply it based on what is telling you to do in the market. So what are chart patterns? Now, chart patterns are visual representation of price movements on a chart. That is like the way you see things like this, right? You see all this, you see the way these charts are. Now, you need to look at it in a way that what pattern is it giving you? What pattern is it giving you, either for you to enter for a buy or for you to enter for a sell? So it's just like a visual representation of price movement, how price reacts at certain key levels, or how price move from one direction to the next direction. So if we're moving from, let's say we're moving from point A to point D, what pattern and what direction is it following to move from that point A to point D? That's how chart pattern. So it just gives you it gives you this concept of whether the chart, is it going up, is it going down, what pattern is it giving you for you to enter for a buy or for you to enter for a sell. So it's just the visual representation of price movement on the chart, and it is these chart patterns again are also used to they're also used to identify trends in the market or to predict future prices. So for you to be able to predict, if for instance we are trading GBP USD, right? So let me put that here. GBP USD. So if we are trading GBP USD, which is the British pounds versus the US dollar. So we're trading this currency pair, GBP USD, the Great British pound versus the US dollar. Now, when you're talking about this price chart patterns, which is the visual representation of price movement on the chart, and it is used to identify trends, whether it's the trend, it is used to identify trends, meaning that you are going to, if you see this chart pattern, is it giving you this um signal that the price might start going up or might start going down, right? It gives you this concept whether its price might start going up and then also it gives you this the ability to be able to predict future prices, either the price of maybe the exchange rate between the GBP, the Great British Pound versus the US. Maybe the exchange rate of the Great British Pound is going to rise, while for the US is going to drop, or the Great British Pound's interest rate is going to drop, while the US dollar British Pound is going to US dollar interest rate is going to go up. So it gives you the ability to be able to predict future price movements, right? Whether we're going up in price or we're going down in price. It just helps you. So it also gives you this formation to help traders predict future prices movements based on past movement of price. So now, if we are saying we want to, let's say we want to trade these chart patterns now, it can give us the ability to predict using past price movement and see how this movement or how this price or react at social points, how they behave, the pattern in which they are forming, and they apply it to future prices, how they can also react in the future. So that's really what chart pattern is. So chart pattern again is a visual representation or visual formation of price movements on the chart. So it is used to identify trends and um also used to predict price movement. I don't know if I should write that down, but let me see if I can just try that very quick. So chart pattern, um, visual representation of price price movements on a chart. So they are used to identify trends. They are also used to predict future price movements and also, okay, comma, and also help traders make informed decision. That's we're talking about decision either to buy or to sell. So that's what chart pattern is. So let me make this a bit bolder. So today we're talking about chart patterns, right? And we say chart pattern are visual representation of price movements on a chart. They are used to, let me break this down. So they are used to identify trends, predict future price movements, and also help traders make informed decision. So I also help traders make informed decision. So I guess you understand now. You understand what is chart patterns. So chart patterns are visual representation of price movements on the chart. They are used to identify trends, predict future price movements, and also help traders, which is you and I, to make informed decision whether to enter for a buy or to enter for a sell on the market. So now we have different price chart patterns, but I'll talking about like 4 or 5, right? So I don't know how many we can cover up for today, but by tomorrow we're to cover the whole chat pattern I want us to talk about. So talking about at least like 4 or 5. So the first one we're talking about, um the first chat pattern we're talking about is the double top, which is more like an M pattern, right? You see it is more like an M pattern. Let me reduce the size of this. Mm, mm, mm. So let me reduce the size of this to at least 18. Okay, this is better. So here we have the double top, which is like an M sign. Then we also have the double bottom, right? Which is more like a W sign. And then we have the third one. Okay, let's talk about the head and shoulder. And the space shoulder, SHOULDER. I guess that's how the space shoulder. And then the fourth one being the inverse or inverted, anyone you want to call either inverted head and shoulder or inverse head and shoulder. So let's just use inverse head and shoulder. I hope this my shoulder is correct. No, don't mind me, guys. So this is the okay. Then we can add. Let me see. Okay, let's add. mm, okay. Um, multiple candles stick rejection. If we're going to really talk about this. So these are the four. We have a lot of them, but this is the four we're talking about. So this double top you can also call it. It looks like an M pattern. That's why I put M in bracket because look at, or you can also call it equal highs, right? You can call it equal highs, but it looks like an M pattern. That's why I'm putting the M pattern in bracket. So I hope you don't get confused. And why the double bottom? It also looks like you can call it equal lows. So let me put this here. You can call it equal lows. Equal lows. So okay. So share my entire screen now. So this the most of the chart pattern we have, right? The double top, which can also be called the equal highs, the double bottom, which can also call the equal lows, and it looks like the blue, right? It looks like the blue sign for the equal bottom, for the double bottom. So let me put this here, right? And then we also have what we call the head and shoulder, the inverse head and shoulder, and multiple candlestick rejections. So now let's talk about each one of these. I'm going to do a presentation of it here, and then we'll also see how they also look like on charts, right? So let's start with the double top, which is equal highs or equal low. Now, for equal high or equal low, this is how it looks like, right? For a double top, right? So let's say price is going up like this, right? And then, okay, sorry, it just gives you this pattern of a reversal. So it's a reversal pattern, right? So whenever you see this on the chart, it means that a reversal is about to happen in the market. So let's say we're going up in price, right? For the double top, we're going up in price, right? We're going up in price. And then this happened. So it created something like this. So instead of us to continue going up like this, then this happened, right? This happened. So when you see this like this, before the trend was going up, right? We were going up in price, and then this double top mean that a bearish reversal is about to happen in the market. So whenever I see a double top happen in the market, especially at key levels, like maybe it's a resistant level, it means that price is not able to continue pushing the price upward. So it's giving this double top, meaning that a reversal is about to happen in the market. So if you look at this point like this, it looks like an M sign. You see, looks, that's why I say it looks like M sign here. So you can see the double top looks like an M pattern, right? It looks like an M pattern, but it's actually an M pattern. And then I also call it as equal highs, because if you also look at, we have more like equal highs here, right? Between here and here, they're a bit equal, right? You can see they're equal. So this means that bearish reversal, um, a bearish reversal in the market is about to happen. So if we're going up in price, right, we're pushing up in price like this, and then why we're going up in price, right? We're going up, and then this M pattern form. It means that, so let me put this to be, let's give it a color of green since we are going up in price. So we are going up in price, right? And then it's formed this M pattern, right? This double top or equal highs, right? After it formed it, it started dropping down. So you mostly see something like this. So let me use this as red because we're going down in price, right? So this is how you are going to see it. Whenever it forms like this, it means that this thing is changing from going up to start going down, meaning that it's changing from a bullish to a bearish. So now you may likely see this happening now in the market, to pull up like this and then start pulling down. So you can see it has changed from going up trend to a downtrend, right? It was going up, and then when this M pattern form, which is the double top or equal highs, meaning that a bearish reversal is about to happen in the market. So this is an example of a double top. So a double top is a bearish reversal pattern in the market. It's tells you that, okay, when this pattern form at key level, it means that the price, buyers are not able to continue pushing the price up, right? So sellers step into the market, push the price all the way down, and then change it from a bullish to a bearish price movement. So this is an example of a double top. I hope this is clear. So I'll put it here, double top. So you can call it looks like an M. That's why I'm giving you this cheat code, that whenever you see it looks like an M. So you can either call it equal highs, because you can see the highs are equal, or you call it double top, right? Or you call it an M pattern, whichever one you choose to call it. So this is an example of a double top. Now for a double bottom, which is the second one we'll be talking about, let's see if we can cover up the all five of them. But if you can't cover up, tomorrow we continue the next one. So now let's talk about the double bottom, which is the equal lows and looks like a W pattern. So let's say we're coming down in price, right? We're coming down, but before I show the presentation of it, now double bottom tells you that from tells you that the market is about to, it's a bullish reversal pattern, because it's telling you that the market is about to reverse to the upside. So if we were going down in price, right, and then the double bottom forms, which is the equal lows or the W pattern form at the bottom of a downtrend, it means that a reversal is about to happen from a bearish to a bullish reversal. So if we're going down in price, when this double bottom form, it means that the price is about to reverse or it's going to reverse to the upside. So that's what double bottom or equal lows is. So now let's say we're coming down in price like this, right? So we're coming down in price, right? So sellers were pushing the market down, we're going down in price, and then this happened. So, right, as usual. So, but sellers could not continue pushing this down like this. They could not continue pushing it down, and then it's formed like this, right? It formed like this. So you can see it has changed from going down. It has started giving us pattern that is about to change to the upside, right? So here was a downtrend. It was giving us this downtrend, and then it gave us this W pattern, which is the double bottom, because it looks like a double bottom or equal lows. So you can see the lows are equal, meaning that this trend is about to change from a downtrend to an uptrend, right? To an uptrend. So let me use the same arrow. So let's say we were going down in price, which is red, right? We're going down in price, sellers were pushing the price down, and then this double bottom form, indicating that a bullish reversal is about to happen in the market. And then, right, so you can see we'll start going up in price because the pattern is already telling us that, it's giving us this signal that this trend is about to reverse or is going to reverse to the upside for a double bottom. So let's type that here. So this one is called double bottom. How do you even spell this? Bottom, or I don't know. So this for a double bottom, right? So this, so for a double bottom chart pattern, it's telling you that, or it's giving this indication that price is about to reverse to the upside. So it's a bullish reversal pattern that happened in the market. Why for a double top, it means that a bearish reversal is about to happen in the market, right? So, and then whenever this double bottom happen, it signifies that you can see something like this. The moment it can pull down a little, right? It can pull down like this, and then it will start pulling up, right? It will start pulling up. So you can see it has changed from a bearish reversal because we're coming down in price, which is bearish, we're going down, and then to a bullish, which is going up. So this is an example of a double bottom. So here is an example of a double top. Why here is an example of a double bottom. So the third one we have on the list is head and shoulder, chart pattern. So let me draw that here. So now head and shoulder pattern. So we're starting from the third one, which is head and shoulder. Now head and shoulder is also an indication that price is about to reverse to the downside, meaning that head and shoulder pattern is more like it's a bearish reversal pattern that whenever it happens at the bottom at the top of an uptrend, it signifies that, or is giving this signal that this trend is about to reverse from going bullish to going bearish. So it's a bearish reversal pattern. Now let's look at it and see how it looks like. Now, this is how a head and shoulder, just like human beings, we have head and we have two shoulders. So the shoulders, you can see it's like almost at equal height, right? It's mostly at equal height. So you get to see something like this. So let's say we're going up in price because the head and shoulder, we're going up in price, right? We're going up in price, and then something like this happen, right? And then it comes down like this, right? It goes up like this, and then you can see something dropping like this. So you can see it has given us this head sign, which here will be our head, right? Here will be our head, right? Here will be the head, and then while this place will be our shoulder, right? This will be our shoulder. So I'll just draw that long like this. So here will be our shoulder. Let's say that's here will be the right shoulder. Okay, let me do that. So here will be the right shoulder, and right here will be the left shoulder. So this is our left shoulder, right? So this is our left shoulder. So we're going up in price, right? So we're going up in price, right? We're going up in price. And then this head and shoulder pattern form. And I said in definition of head and shoulder pattern is a bearish reversal pattern, right? That happens in the market. So if we're going up in price, right, the price is going up, which is bullish, and then this head and shoulder pattern, it signifies that a bearish reversal is about to happen in the market, which is this. So this is our head, this is our shoulder, and we can also call here like the neckline, right? You can call here at the neckline. So let me just do that. You can go here like a neckline, just this point like this. You can call it the neckline. So let me put this here. You can call this the neckline. You can, as I said, you can call it the neckline. Neckline. So can call this neckline. So now what you now see in the market when this head and shoulder pattern form, you see something like this. It will pull up a little, right? Either to here, to the neckline, to retest it, or it will pull up maybe to this point, and then it will start going down, right? To start going. So this is an example of a head and shoulder pattern. So it to start pulling back down like this. So this is an example of a head and shoulder pattern. So why for a inverse head and shoulder, which is the fourth one, for inverse head and shoulder is a bullish reversal that happen in the market. So it's just like the opposite of this one, right? Just the same way we have the double top. The double top is the opposite of the double bottom is the opposite of the double top. Why for the head and shoulder, the inverse head and shoulder is the other version or the opposite of the head and shoulder. So for the inverse head and shoulder, it will look like this, right? Where we'll be coming down in price, right? For the inverse head and shoulder. So price was pulling down, right? And then you see something like this, right? You see something like this, right? So if you see now, this is an inverted head and shoulder, either inverted or inverse head and shoulder, just depending on how you want to call it. So this is the head of this is the head, this is the left shoulder and the right shoulder. So this is our neckline, right? This is our neckline. And the price is now changing from pulling down to pulling up. So it's just the opposite. So if we're coming down in price like this, right? We're going down in price, and then the inverted head and shoulder form. So this is our head, right? This is the head. Sorry, not my head. This is the head of the of the pattern. Yes, this is the head of the pattern. This is the right shoulder, right? This is right shoulder. Then here this is the left shoulder, right? Left shoulder. Right, this is the left shoulder, and then this is our also neckline as well. So here is our neckline. Right. So when you see this now in the market, especially at the bottom of a downtrend, it signifies that a bullish reversal is about to happen. And next thing you see in the market is it will pull down a little, right? Because the price, price don't just go up in a straight line, right? You cannot just see price going up in a straight line like this, going up, going up. No, there's always points where this price get to pull back a little before going up. So that's why you see I'm not drawing straight line like the saying that the price is going up in a straight line. No, price always whenever it goes up, it pulls down a little. When it goes up, pulls down a little, right? So these are called pullbacks or reversals, mostly called pullbacks, right? Before continue that move that it was doing. Right. So there's always pullback in the market. Whenever a market, if it's coming down, it's not coming down in a straight line. It's always, if it's coming down, it comes down like this, go up, pull back a little, come down, pull back a little, come down, pull back. So that's just how price move in the market. You can't just see price going up all the way. It's like, let's just keep on going up like this. No, no. There are points that there are most possibly points that you see when market will pull up very up like this. But whenever I pull up like this, it always comes back to, and most of the time it can even come back to filling all this gap, right? It can come back to filling this gap that is created here, and then continue pulling up, right? So you can see something like this also happen in the market. So, but you cannot just see market moving up like this in a straight line, just keep on going up. No, no, you can't see it like this in the market. It's either as it's pulling up, it's pulling, whenever it's going up, it's pulling back a little. We pull, we go up, we pull back a little, we go up, we pull back a little. That's why I see most at times I'm doing that because this is how the markets move, right? So for a inverted head and shoulder, okay, let me write this down here. So this is inverse head and shoulder, right? Right, this is our head and shoulder. So this is the head and shoulder pattern, right? This is our head and shoulder pattern. Right, this is our inverted head and shoulder, right? This is our inverted head and shoulder. The head and shoulder is a bearish reversal pattern whenever it occurs at the top of an uptrend. While for the inverse head and shoulder, it's a bullish reversal pattern that occurs at the top of an uptrend, that occurs at the bottom of an uptrend, of a downtrend. So it signifies that a bullish reversal is about to happen in the market. So for a head and shoulder pattern, it signifies that whenever it happens at the top of an uptrend, it signifies that a trend is about to change from going up to going down. So it's a bearish reversal pattern. Why for the inverse head and shoulder pattern is a bullish reversal pattern. So whenever price is coming down and it forms this inverse head and shoulder, it signifies that a bullish reversal pattern is about to happen. So price will start pulling back up. So the third one we have is um the multiple candle rejection. So let's see if we can cover up this before I show it on the chart, right? So for this one, it's most you just see more like a candlestick, right? So let's just see if we can cover up this candlestick. So you can see it at either key levels, like price rejecting a particular point, not able to push up, right? Not able to push up. So you can see it something like this. See something like this. Yeah. So let's give this some color. You can see this something like this. See this as so it doesn't matter. Sometimes you can just see all of them showing one particular this thing. So I'm just giving, let me use black for all of them so that it will not confuse you. So I'm going to use black instead of giving this color red or black because you can see it different. You can see it either black red or you see it green. So it doesn't really matter, but it means a lot when you see it, when you see this thing happen in the market. Right? So these are multiple big rejection because price is now when you see something like this, price is refusing, it's refusing to continue going up, right? It's refusing to keep on going up. So and then it might cause this pull. Now when you see sometimes, so you can also see it on the downside, right? You can see something like this also happen at the downside. You can see something like this also happen. You can see something like this happening to the downside. Just depend on how you see this candlestick form, right? It can be multiple. It doesn't mean that it has to, they just have to be maybe three. No, they can be multiple candlesticks. But as long as it's showing this rejection, creating this long wick, right? As long as it's creating this long wick, showing that there's rejection in the market is rejecting. So, okay. Now let's give an example. So let's say we're going up in price, right? So let's use this one, right? So let's use this one. We are going up in price, right? we're going up in price like this. And then for some strange reason, candlestick started forming at a particular place, right? They started forming at a particular rejecting, because whenever you see these wicks here, right, it means that at some point price came all the way to this up here, right? At some point price came all the way to this up here, but it could not keep on forming, and then we close at this point, right? We close here. This was the close of the candle, and then the next candlestick started again. At some point, they were able to push the price all the way up here, but it's still rejecting to keep on going up, right? It's still rejecting. Then this one form again, instead of it to keep to going up, at some point the price came down up here and they still push it down. So it's rejecting to keep on going up. So this is an example of um multiple candlestick rejection, right? So you can see like 3, 4, 5, 6, 7, rejecting a particular level, right? So same thing with this one as well, right? So we can be coming down in price, right? We can be coming down in price like this, right? We can be coming down in price, and then it will form like this. It's rejecting this point. So at some point, this price came all the way down here, right? But now they were able to push the price all the way and close here. Same thing at some point, price came all the way down here, but they could not continue pushing it down, right? So it's pushed up again. Same thing with here. So this is showing that there's a lot of rejection in the market, and possibly when you see multiple candlestick rejection at the bottom of a downtrend, right? At the bottom, because this is down. So we are seeing multiple rejection, meaning that it's rejecting to keep on going down. So there's possibility that it will pull up and start going up, right? There's possibility that it pull up and start going up. So same thing for the for this one, this other rejection wicks. It means that at one point price was going up and then started rejecting. It was not like this rejection from it keep on going up, right? So there's possibility now that you start seeing it's rejecting that place and start pulling back down, right? Before you know, price will start pulling back down. So this is another example um of chart patterns as well. So it doesn't really matter the candle. You can see red, green, red, green, red, green, red, 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 or green, green, depending on how you see it in the market, right? So that's why I just call it the black so that it will not confuse you. So now let's see this example. We just have like few minutes, I think like 7 minutes to the time. So let's see if we can just do a quick recap of this candlestick, this chart pattern. Let me show how they look like on the chart, and then we now call it a day. So let's see if we can cover up in these 7 minutes that we have. So let's see if we can cover up for this little time that we have. Just have like 7 minutes to the time. Okay. So this is an example of equal lows, right? This is an example of equal lows, which is the double bottom, right? You can see this is an example of it, because at some point price was pulling down, right? At some points we were coming down in price. So price was pulling down, right? Price was pulling down, and then this happened. You can see it from here, it went up, but it could not continue pulling back down like this. So it created this equal lows, which is double bottom, which is more like an M pattern, and then started pulling up. So you can see this bottom here came to reverse. So if you were trading just chart patterns, you could wait after this pattern form, showing you that this trend is about to change from an uptrend to a downtrend, right? You can just enter for place your buy immediately after this neckline here. So here can also be called the neckline. It's broken. You just wait for this pull back down, and then you enter immediately here, put your stop loss a little bit above here, and then you target here, and you can see beautiful risk to reward ratio. Just hit some quick box. So this is an example of a equal low, which is the double bottom, right? This is an example double bottom. So you can see how it looks like here, right? You see at some point price was pulling down, and then from this bottom giving this sign that okay, yes, price is about to reverse to the upside, which is started going. So this a visual presentation of it here. So at some point we were pulling down in price, and then this gave us this pattern of a W pattern, which is double bottom, meaning that this price is about to change from it going down to it going up. And you can see if you were trading just chart patterns, you could just enter the moment it broke this neckline here, right? Which is this point. The moment it broke this point, at this point here, the moment it broke this point, just wait for it to pull back, which is this pullback, and then you enter for a buy to the upside. So if you were trading just candlestick, you just do the same thing here, right? You wait after it break this neckline, wait for it to pull back down here. So you wait for it to pull back down here, then you can just enter for a buy at this point, right? After this pullback, and then you just target up, and you can see you just make some quick bucks in the market put your stop loss a little bit above down below here and this. So you just make a quick box here. So let's give an example of a double top. Let's give an example of a double top. We have like 4 minutes. I don't know if we can cover up. Let's see if we can give an example of a double top. Um, double top, just saying double. Okay, this is also an example of a double bottom, right? This is an example of a double bottom. So you can see here at some point price was pulling down, right? And then it formed this double bottom, right? So this is the retest of the neckline. So you could just enter for a buy at this point, right? You just enter, put your stop a little bit out and just target 1:2. So you can see just made some big bucks in the market. See, just make some big bucks in the market. So just this is how this works, right? So this is an example of a double bottom. So now I'm trying to look for a double top, right? Let's see if we can get a double top. Double top. Let's see if we can see an example of a double top. Okay, I think I was just seeing one. Okay, we have just 3 minutes to go. Okay, just 3 minutes. Let's see if we can get a double top here. Right. Let's see if we can get a double top here. Okay. So this is an example of a double top, right? So this is an example of a double top, right? Or equal highs. So you can see at some point we're pulling up in price, right? We're going up in price and then it's formed here. So you can see it's formed here, right? After it formed, so you can see this retest here. That you can use this one as the retest. This because at some point price came to this point here. Because at some point price came to this top here, right? Or you can use this one because it came back and then you see that the market started pulling down, right? You can see after it formed at this point, which is telling us that this price is about to reverse to the downside. And the moment it's formed, oh shit. And the moment it formed, you can see it started pulling back down, right? So this is an example of a double top. So let's check for the inverted head and shoulder, right? Just have like less than 1 minute. So let's see how fast we can get this for the inverted head and shoulder. Right. And then for the head and shoulder as well. So now this is an example of a inverted head and shoulder, right? Okay. So this is an example of a inverted head and shoulder. So you can see price was pulling down here, right? We're coming down here in price, right? And then it happened. So this is the head, this is the left shoulder, this is the head, and this is more like the right shoulder for me here, right? Because I sometimes pull here. So you could just wait for this retest. God.